Let's talk some specifics. Trading with Gareth Soloway right now. He's a chief market strategist at InTheMoneyStocks.com. Hey, Gareth, we're kind of breaking down here a little bit today. Tesla pulling some weight again, or what?
Yeah, absolutely. This is definitely a recipient of the Tesla earnings, the spaceship that exploded. And I also think this is options expiration. I mean, the market got lulled into this float by the dip higher. And then here we are late in options expiration, where the institutions are now pushing things the other way to maximize their gains on the options that they sold. So there's a bunch of different things going on here in the market. Overall, I remain very bearish on the macro based on the fact that the Fed has told us that there's a mild recession coming. And I think what's important to continue to remember is that if the Fed says mild, we know it's probably going to be worse per their issues with transitory inflation.
All right, so it sounds like you and Jim kind of have a similar overlap in your macro view. As we heard, ultimately he thinks that the Fed will return to applying some pressure here, despite what the market thinks. I know that Tesla, you also, though, had been, as a trader, kind of preparing for a little bit of a big event on the chart. What door do you think this opens for either Tesla specifically or the kind of Tesla-related high beta trades?
Yeah, so I think that's the key, right? We've seen crypto go nuts. We've seen Tesla go nuts. NVIDIA has been on fire as well. So all of these different stocks that are high beta names have been on rip-roaring rallies. And I think this is the unwind now. They've kind of, the market and the players, the bigger players, have lulled most people into thinking this dip buying is what's going to work again. The markets are going to return to their 2021 guidance and kind of thrill level. And I don't think that that's going to happen. Again, you have a macro data point that we continue to see weakening across the board, and ultimately Tesla's telling you that their margins are shrinking. They've had to cut prices of cars 5-6 times just in the last couple months. And again, you have to take that for what it's worth. And Elon's being straight up. He's telling you what they're doing, and there's a reason. You don't cut prices when your demand is super high. Okay.
The knock-on effect here, as you mentioned, with the whole high beta rally of crypto, with Tesla together, the chips, if we do see this kind of open the door to the downside, do you envision the market lumping that stuff together, or will we see these AI plays in the chip space go their own way? I mean, is it a pipe dream to think the market could have separation and dispersion, or are we going to trade in big chunks like we always do?
No, I think the momentum plays, even the AI plays, are going to get hit. And again, you have to keep in mind that the AI technology is sexy. It's awesome to think about. But in reality, how long is it going to take to generate significant amounts of revenue off of that? You're talking years out. So just like we saw with the solar stocks back in the day, that was the hottest trade. We saw the marijuana stocks. That was the hottest trade. You know, the market and investors get really hyped up about amazing stories. But ultimately, it's when does that revenue come through? And once people realize it is a while away, that premium starts to come out of them just a little bit.
All right. So bearish on that group basically at the moment, if we kind of call it the high beta trade. What about the giants? I know that you're sort of a skeptic of the notion of big caps being a safety trade, but the market's kind of treated them like that. Where do you think Microsoft and Apple fit into this?
Yeah, so for me, I look at the Apple daily chart, and it continues to be up into a major level here, 168 to 171, huge resistance. It's not that far from its all-time highs, and I keep coming back to what the Fed said recently about a mild recession. And even if it is a mild recession, that means people are going to struggle to pay their bills, and the idea of investors or consumers paying up for the next iPhone when it's $1,300 or so, to me seems a little silly when they could push it off a few months. And if you just start getting people to push off that kind of new phone a few months, it really will take its toll on Apple. So I understand people look at Apple and say, oh, it's an old trusty company, it's going to do great no matter what. But I think people have to realize is that we get into a real recession, which, by the way, we have not seen in years and years and years. COVID was not a real recession. It was a quick dip. The markets were back to all-time highs within a couple months. We haven't seen a real recession since 2008, 2009, in my opinion. So that could be a game changer for how people deal with Apple and Microsoft and even some of these like NVIDIA.
Okay. The potential here for these tech trades to break down then, does that accelerate the recession case, Gareth? Do you think that we're going to be having that conversation again soon?
I do. And in fact, I have it priced in where we probably by year end see 3,300 on the S&P 500. I think within 2024, 3,000 on the S&P 500. And so I'm preparing, right now I've been building short positions in the market and kind of slowly inching in at these levels, waiting for that volume to return, waiting for us to get more clarity from these earnings from the big players over the next couple of weeks, and just be ready for the jobs numbers to really weaken significantly. And I think as soon as the market comes to the realization that there is a recession coming and the Fed cannot print us out at these levels or at these kind of inflation points, that's going to be a shock to the market and really kind of kickstart a lot of this big selling.
Okay. Gareth, the one thing that you do like here, because this is obviously distinctly bearish tone in your voice here today, long-term looking abroad. In particular, going down to Brazil for a little long vacation in EWZ, is that right?
That's right. And that's actually had a really nice pop over the last couple of weeks. Again, I think that's the play right now, is to look outside of the U.S. to stories where they've been dealing with other things and have gotten on better tracks. And I think the U.S. now becomes kind of a place where money rotates out. If we remember, ever since 2009 and the Fed printing of money, money has come across overseas into the U.S. So it's due to see a little bit of an outflow. And I think you have to start looking at a lot of these South American countries as potential next opportunities for good upside.
All right. Appreciate the combo. Thanks, Gareth. We got a long position in there and noted for all the other warnings. Good to catch up. Thank you.
Thank you so much.
You got it. Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com.